Dollar slips against euro, but maintains weekly gains. Fed policy and economic outlook. Is Washington's economic tug-of-war finally shifting the balance of global currencies? The US dollar took a slight dip against the euro on Friday, but here's the surprise. It still posted gains for the week as market watchers kept a sharp eye on evolving Federal Reserve policy and the persistent pressure coming from Donald Trump's critiques of Fed Chair Jerome Powell. But here's where it gets controversial. While the dollar's movements seem minor, the political undercurrents could reshape future monetary decisions in ways many investors still overlook. Let's unpack what's driving the drama. Recent data indicates U.S. consumer prices ticked up moderately in June, suggesting that higher tariffs may be nudging inflation upward. Producer price numbers, however, remained mostly unchanged, muddying the true outlook for inflation. This comes as President Trump has turned up the heat on Powell, accusing him almost daily of dragging his feet on cutting interest rates, a rare spectacle even by central bank standards. Powell himself has stated he expects inflation to climb this summer as tariffs bite harder, effectively delaying any expected rate cuts from the Federal Reserve. But, and this is the part most people miss, the labor market is sending mixed signals. While headline job growth and unemployment rates appear solid, experts like Lou Bryan from DRW Trading highlight that hiring has slowed dramatically. Bryan raises a red flag. Layoffs may be at historic lows, but if that changes, unemployment could quickly surge. Should the Fed be waiting, or acting sooner? In the midst of this debate, Fed Governor Chris Waller injected a counterpoint, saying he supports a July rate cut, arguing tariffs' impact on inflation will be limited. Waller's broader concern. The underlying data points to a fragile private sector job market, and the Fed, he warns, may need to move ahead of potential hiring slowdowns. This policy uncertainty isn't happening in a vacuum. News swirled midweek that Trump might be preparing to fire Powell, an unprecedented move that briefly sent the dollar tumbling, although it bounced back after the White House denied the rumors. Powell's term is set to expire in May, and with elections looming, the stakes for Fed independence have rarely been higher. Should a president have this much influence on central banking? Tell us what you think below. Meanwhile, Chicago Fed President Austan Goolsbee is watching inflation expectations closely, admitting he's a little wary that tariffs are sneaking their way into consumer prices. Yet, he remains confident that the U.S. economy is generally strong and still anticipates a notable drop in interest rates over the next year. Investment markets are now betting on around 0.5 percentage point in rate cuts before year-end, seeing chances for 2 quarter-point reductions, likely starting in September. Against this backdrop, the dollar index stood almost unchanged at 98.49 for the day, clinching a 0.65% gain over the week. Turning to Europe, the euro nudged higher by 0.22% to $1.1621, although it's down nearly 0.6% for the week. The euro's earlier surge fizzled after reports surfaced that Trump is pressing for a sweeping 15% to 20% minimum tariff on all European Union imports, a move poised to intensify trade tensions across the Atlantic. In Britain, the pound was stable at $1.3411, but faced a 0.64% drop over the week, while the Japanese yen slipped modestly against the dollar ahead of key parliamentary elections this Sunday. Political instability looms in Japan, as polls signal the ruling party's grip on power may be weakening. Should the coalition lose its majority, new uncertainties could complicate sensitive trade negotiations with Washington. At the same time, Treasury Secretary Scott Bessent assured Japan's Prime Minister Shigeru Ishiba of ongoing efforts to reach a positive agreement on tariffs, hinting at possible breakthroughs even as the political ground shifts beneath both countries. And for those invested in digital assets, Bitcoin retreated 1.51% to $117,680, staying below its all-time high after a rollercoaster week. In a significant regulatory move, the U.S. House of Representatives just approved a bill to establish clear rules for dollar-pegged digital stablecoins, potentially paving the way for broader acceptance in mainstream finance, pending President Trump's signature. Are central banks losing their grip to political forces? Should the U.S. prioritize tempering inflation over boosting job creation, or is it time to reverse course? Dive into the comments and share your take on where American monetary policy should head next. This debate is just heating up, and your voice matters.